Welcome to This Week in AI. We've got an exciting show this morning. Stay tuned and don't forget to hit like and subscribe. We're hearing about new exciting AI wearables, about Microsoft, OpenAI, and TikTok blowing cash and maybe a recession.
I'm excited.
I also came up with a bit of a, what I want to say, like massaged it into an item. Together with my friend, the help of my friend, but still.
Is your friend an AI?
Yeah, exactly.
Do you have other friends? Do you have a real friend?
Speaking of, maybe that's a good way to start. Have you heard of friend.com?
Friend? Oh yeah, I have. That is kind of creepy. What's your take on that?
So check this out. So it's pretty funny. The story starts with Humane. Humane is a startup that raised $230 million and built a $700 AI-powered pin device. It's a wearable pin. It's designed to integrate AI seamlessly into the daily life. It didn't work out. It's I think of it as like a part of a new category of devices that are trying to be kind of AI first, voice activated first interfaces. And I guess the bet is that you know how touch devices were a new category as opposed to mouse devices. So the same thing will happen with voice devices. I'm not sure. The problem is that voice is a terrible interface. You have to know exactly what you say, exactly what you mean. People are difficult with that. It needs to interpret it like a little bit, and there's a lot of things you can't do. I'm not saying it's not going to happen. I'm saying it's not happened yet, and it's still under research. So how do you find up a new category? One way is to throw $230 million and try to build a device. All right, didn't work. But here's what happened. So they launched Humane, and if I'm not mistaken, there was this YouTuber, Marks Brownlee. I heard of that whole
Yeah,
saga.
yeah. I love all this stuff. Yeah.
So he's this popular YouTuber, give you tech reviews, and he just destroyed them. And there was a whole kerfuffle on the media around it because they used to, tech bros from Silicon Valley are used to getting just, destroyed by mainstream media types because it is this idea that tech journalists are baddies. But he was kind of one of them. So what happened there? Whatever. I think that he did the fair thing to do, which is like a honest device review, and he said what he thinks. Okay, so if you fast forward a few months, they're already trying to sell themselves. And so, clearly not really working. But I hear that they bring this Cisco guy to their board and they try to salvage the situation. I don't know. We are old enough to kind of know, I guess. But like, when was the last time Cisco saved any situation? I don't know.
Well, no. Look. So I think this, but I do think this communication, how we're going to interact with AI models or AI in general, people are trying to work it out. And while
I
it's
agree.
easy to go,
So let me tell you the next step on this little saga of people, and there are people trying to work
yeah,
it out. So Humane is not the only one struggling. Rabbit recently came out with another take on an AI first, voice first kind of UI hardware device. Have you seen it? It's like a red little square you put in your pocket, and apparently you talk to it or something. And it's an LLM, it's just a fast channel to an LLM. Anyway, they raised only 30 the last I checked, maybe more now, but it's also flopping. All right, so after these two flops, what do we have? Well, we have another player trying to make waves. This is friends.com. They grab a lot of attention this time because their Series A round only raised 2.5 million. So at this stage you say, well, that's not insane. They're raising a small amount of money. They're doing an experiment, but the nice thing about it, the kicker, is that they spent 1.8 million of the 2.5 they raised to just buy the domain name
Oh,
friend.com.
really? That's bizarre.
So,
That's
you tell
oh,
me how many hardware engineers the $700,000 they got they left buys them. I think it's probably one because you need a bit of a runway. That's friends.com.
well,
Good luck. Honestly, I mean, this is a better a better way to attack the problem than blowing up 230 mil. Some
yeah.
people have money to blow up, obviously. What do you think?
Well, we're talking about it, so that's one thing. So the domain may be worth that amount, but I think that's one thing. Look, I think on the other side, there's some other news as well that's maybe slightly related to that, and that's about OpenAI have begun rolling out their advanced voice mode. So I don't know if you saw a few months ago, we had that. Let's talk to ChatGPT, and it'll kind of have more natural conversations, and you can say, "What's this?" and it's doing it. So they've actually started to roll this out. That was one where Scarlett Johansson's voice was, her replication, where they sort of had to take that down. So I think, look, they've started to implement that. I think, this is the question is there that you'll just be able to use that as it is, and these other products won't exist, or whether there's got to be something significantly different to what they're offering right out of the box, out of ChatGPT. So so I think it'll be interesting. I think they're trying to put a lot of safeguards in that a bit more, and that sort of deployment of that. So yeah, I think these devices and this voice, whilst people are trying to find the use exactly on the day-to-day basis, I still feel like it's a bit of a novelty. I every now and then go and, whether it be Claude or whether it be ChatGPT, use that to say what's going on here. But I'm not sure I found the exact use case. But I think, for people, if you imagine for people who are hard of, who can't see, or who have, issues around visibility, I think all these things would be great. It will add an element of really smarts to improve people's lives. So, I mean, I can think of some use cases where, while it seems silly for people to be using them, there'd be some really useful things out there.
So look, it's when the iPad came out, there was a huge avalanche of other companies who announced tablets. Everyone and their sister, Acer, announced tablets. Everyone made a video of a 3D looking device and announced they're going to come up with tablets. There's exactly 2 companies that survived that, maybe 3 with Surface. So there's Samsung, Apple, and and Microsoft now. Hardware is hard, notoriously, and I applaud a group of people thinking about a new product category and going after it. I'm not mocking it. I'm just thinking it's hilarious that they spend 70% of the amount they raised to buy a domain name. It's much more popular media, like wearables. I don't like the idea of wearables. Sure, I'm conservative. That's okay. Maybe it's an age thing. I'm double the age, honestly, of those guys who are now trying those things out. That doesn't make me half the intelligence, but it does mean I'm a different generation. So I don't buy wearables because I don't clear what exactly am I getting. I'm already hooked to the device like that. You anyway need the device there. So suddenly it's on you looking at everything. And I mean, do people think it's cool? I'm not sure it's cool. It's kind of lame in my opinion. I don't know, of course. But the point I'm making is that it's a fashion type decision. And I think that's why the videos that are coming out from Humane and friends, they're very fashion-y oriented. They're not device capability problem. Here's a novel solution to an existing painful problem. It's literally about the people talking to someone instead of their imaginary friend. They're talking to a digital imaginary friend. That's not a problem space. Maybe it is. All I'm saying is I think it's noteworthy.
Well, hold on. I think there are lots of lonely people, and if you could have a conversation with someone, I'm not saying it's good or bad, but there is a gap somewhere there. The question is, are people going to use a device like that for that interaction if they didn't have someone else there? We're already seeing that, like Dror, we've seen on some of the investment sides, we've seen when it comes to AI relationships, there's a demand. So logically, whilst I can't quite see it, there are people that are using this technology to have interactions, and so I don't think the form factor. I don't think that's right. I mean, when we talk about wearables, I've been wearing this for like probably 2-3 years now as a wearable, but it's not a wearable that interacts like it doesn't. It's not distracting for me. It's not something that takes over, but it keeps track of things that I want. So maybe that is how some of this will be, which is that you don't have an interface on it necessarily. It might be able to give you some insights later in the day, and it's not interfering with your life. But yeah.
So I think we can agree that the market is still searching for that novel use case for AI first device, voice first type. Is it wearable? Is it not wearable? Use case. Really, it's a use case challenge. It's not like a hardware problem. I mean, the fact that they built a prototype, in 2.5 mil where they spent 1.8 on the URL. Tells you something. That's hilarious. Anyway,
Yeah. Yeah. Yeah.
speaking of, character AI is being snatched by Google. So, but it's not an exit, and it's labeled in the media as AI startups are feeling the heat. Character AI founders just joined Google. So it's all everything's acquihire now because of regulatory scrutiny, right? So Google kind of announced it's buying AI companies. So the new shtick is to do acquihire. So they did like Microsoft did this acquihire of 600 employees from this
Yeah.
I forgot the name. But so character AI, which is another kind of assistant AI voice, all that the same thing, being snatched by Google. Is that a good thing for the industry or a bad thing?
Look, I think we saw last week Canva buying Leonardo, and like whilst Canva still is not quite at that level, they still are from an Australian point of view one of the bigger success stories here. Look, I think there's a race going on, and you either go and develop it yourself, and this is the opportunity for the startups as well. Is it that their path is the path to exit through that acquisition or a partnership, as whatever way you want to call it? And you can argue OpenAI have a similar thing happening where they're quite linked to Microsoft to put a lot of money in there, and whilst they haven't, they're trying to not be on the board and not do all these things. I think this is where the startups opportunity is in some ways, but I think the big winners aren't going to do that, and they will be create their own product categories and compete on their own. And I think that'll be the exciting ones when we don't have this happening all the time. But it's going to take something very niche, something that is defensible, and people are coming up with something really special that doesn't require those deep pockets of the big players, because I think that's the challenge is a lot of this requires a lot of money, so you need that funding from someone like Google or Apple or Microsoft or whatever.
It really raises fundamental questions in the age of AI, and the age of AI is not the age of any other computing platform in the past, in that every interaction is material cost. It's not, never been in the history of computing where you do a command, you run a command on your computer, maybe at the early computers, honestly. But ever since the 60s or something, there has not been any time when you're literally running a command on a computer costs you like cents, like not 0.00001 cent of a little bit of energy in your laptop, but actually like cents and dollars. And so you get these companies that are phenomenally successful in terms of usage, but they just can't make the business model works because they're burning cash like crazy. And it needs a breakthrough in the like literally like scientific kind of breakthrough at the level of the algorithms, the hardware, the cost of inference and so forth. And it also needs to, I think that's kind of demonstrates that vertical AI, meaning like AI for SaaS, what we call SaaS AI, right? So it's like vertical for a enterprise use case where the problem is understood and the customer would pay per transaction or something along those lines, is a much more promising space than consumer AI, which can explode in usability but burn cash like crazy. I mean, sure, some people can manage OpenAI. I think they're burning $5 billion this year. This is unprecedented, right? So big company growing, really successful apparently, phenomenally bad economics, unheard ofly bad economics. So I guess that's kind of where the industry is right now.
Yeah, but isn't that the opportunity? And I have faith that will create a startup or some technologies that will address how we make this economically viable. I was listening to something yesterday. One of the I think it was the Diary of a CEO podcast talking about the co-CEO of Netflix, and they talked about how the business model didn't work in the early days of Netflix because they were shipping video VHS cassettes, video cassettes, which were quite big, so to ship them in the post. And then it changed to DVDs, which then, the way they proved their thesis was they sent out, put this in the post. They said, if I put this in the post and it arrives the next day, we probably have a business because the economics stack up. And so that shift from VHS to DVD made that business, Netflix, viable at that starting point to compete with Blockbuster, which then obviously we know all the other technology step changes around streaming and so forth. But once again, this is where we might be in this case as well, is that there's something that it's costing way too much, and it used to be that, like with, for example, 3G, 2G, whatever, that was really expensive, and you'd use it very sparingly, or you had WAP before that. These technologies have a cost reduction cycle, and I think we're not quite there with a lot of the AI in terms of the way it currently works. And I have faith that will be the case. Like I say, we're seeing startups that are trying to challenge this, but it's still very early for those. When we talk about hardware, it's going to take some time.
Next up, what other exciting things happened this week?
So look, I think one of the big news is today, and there's lots of news overnight. I think really around the stock market dropping quite significantly, and so we had a Nasdaq drop by 6%. And well, in the context of what we're talking about, really the AI stocks were hit pretty hard, and so we see Nvidia came down. It's fell 10%. Apple, Amazon, Meta each down 4-5%, and same thing with Samsung. And so I think sure there's these concerns about the Fed and so forth, but it happened in Australia. We're seeing that in the US, and so the question is, are we going into a recession? And what does that mean for the startups? And we just talk about the costs of AI, and how do we sort of see this play out now that there's this volatility, or is this just a sort of a bit of a correction? What's your sort of thoughts on that?
So, great question. So, first of all, no one knows the future. You can get 20 experts in a room, and they will have 20 different opinions about the recession, no recession. So, the fundamental here is that during COVID, all the banks basically printed money, helicoptered it to the people, and said them, stay at home, wear a mask, we'll be all right one day. We have way too much money in the system. And then what do people did with this money? So interest rates went to the zero, and people start betting this money in all sorts of vehicles, and this money became basically put to work in all sorts of risky investments and the stock market, because there was no alternative.
Yeah.
It's called TINA. There is no alternative. So now it was time to drain money out of the system. How do you drain money out of the system? Traditionally, the central banks raise the interest rates. But something weird happened, which is that they raised interest rates, but the labor market was still tight, meaning there's not a lot of unemployment. The truth of the matter is that there is this balance between interest rates and unemployment, and the Fed, that you need to keep about 4 or 5% unemployment. That's kind of healthy. If it's too tight, then there's the competition for staff creates a race in salaries, and that's sort of keep fueling the inflation. Yeah. Long story short, we've passed that. We had a few years of inflation. Money is being drained out of the market, and they kept the interest rates high, and there was this there was still money in the system, and there's this new bet, the AI trade. So a lot of people were happy to ride the AI trade, even though it was a little bit detached from fundamentals, like the multipliers were in the sky. I think at some stage you were trading Nvidia 200 forward revenue, some crazy stuff like that. Anyway, a bubble. So what's happening now? Well, finally, it looks like the labor market is cracking, meaning that unemployment rates are going. It looks like the unemployment rates are finally going through to break a little bit. There's less. The weekly results of how many new positions in America are becoming relatively weak. So people said, oh, right, remember how we were saying there's a recession supposed to come in 18 months, about 18 months ago? Here it is, it's coming. The AI trade is going to go out. There's also some complicated Forex related trades with, the yen, apparently, people borrowing in yen, betting in other currencies. It's a complicated story, but the net of it is that we're seeing a deflation of the AI bubble. It wasn't such a huge bubble. There will be some sort of, you can argue that there's some sort of, we're entering some sort of recession. I guess just people, no one can forecast that, but at least the fundamentals shows that by theory, if you hike interest rates high enough, you're going to hit a recession, and then they're going to correct it. So it's this complicated story. What is it for us? Look, no one wants a recession. I think what's if you want a silver lining, I think it's unsustainable. Every time you see a bubble, that's not a positive thing. It's good for speculators, for day traders, but it's not good for investors, for people who build real value, because it just skews. It's just a weird market, and people come with crazy expectations and blow money up. We know it every time and again. So I think that's correction in the AI space. It works in the favor of us AI investors. That's kind of where I'm at.
No, 100%. I'm actually, reasonably happy that there's a bit of a deflation in this. We've got a lot of hype of people jumping on a hype train, and I think our view is long term, and I think long term this will come out in the coming years. So if you have people come out of it where there's just speculation, and I think people will start to focus on developing real solutions, and instead of spending, they have to be tighter with money. And I think that constraint can sometimes bring good solutions for people with good startups. And I think that's what we're looking to invest in, is those startups that have, capital efficient. They do a lot with a little bit of money. And I think that's what's going to be the case a bit more. So I think where you want to be playing and investing is early, not at that later stage where it seems like the money's, So anyway, like I think it's a interesting times. Obviously, there's a bit of a correction going on. We'll see how this plays out in the coming weeks and months and years, really. But I think that is the sort of big news that I think. Yeah, I agree. We don't know where this will exactly go, but I think it's still good for the startups. The challenge is raising money then in that environment, as we're seeing already. It still is slower than it was for 21 sort of peak times. And we are seeing, had some.
It's on the one hand, it's true that it will be harder to raise money. The fundamental, honest reality is that good companies would be able to raise money, and people will support business models that are sustainable and make sense. So I think the truth of the matter is that you've got these successful companies and good ideas, good go-to-market, good companies. All right, let's summarize that. And they will raise money. Now, you've had in the middle stupid ideas that shouldn't be very successful money, and then in times of excess, they blow up all the money, and then 1 in 1,000 of them succeeds, maybe. And then in the middle, you've got those like decent, not gonna be super successful, and then maybe 1 in 10 will succeed. So when times are hard, maybe this becomes 1 in 2,000, and this becomes 1 in 200. Do you know what I'm saying here? What I'm saying is that good business models, in my firm belief, will still be able to attract money. It's the difficult business models that needs to that can't use cash, can't burn cash, and they need to be much more disciplined. And that hurts. That does hurt. But it's not necessarily the answer is that time of excess is better, because time of excess, I think, demonstratedly are not better. You know what I mean? Look at the 2020, the 2021, 22 years, where everything was going through and became a unicorn. And where are all these unicorns now? They're all dead. They're all zombie corns. I don't know. So it's better to be rational.
And that's why we're in the position we're in now, I think, as well, where is that correction. So, but let's move on. Anything else you want to talk about today?
There's this app in their SEC filing. Microsoft has to list OpenAI as a competitor, and it got a lot of attention in some of the media, because it's clearly also an investor of OpenAI, a partner in OpenAI, and up until recently they had a board position, an observer position in the OpenAI, which they basically, by the way, withdrew, exactly because if they are a competitor, they couldn't be seen as also being on the board, because that would be anti-competitive. So I think it's interesting, because they had a really weird relationship, OpenAI and Microsoft. I mean, at the end of the day, I think the bill is like $5 billion that they pay to Microsoft. So I'm not sure OpenAI is truly an independent company. I think it's if they are so negative in the red in their the bottom line, and so dependent in this tech titan, then if I was Microsoft, I would be very, very careful not to attract regulatory scrutiny, because what is OpenAI doing? They're kind of they are challenging Google and Apple. So from Microsoft perspective, it's like a proxy to to their other offensive endeavors. Does it make sense? That was a bit
Yes.
of a militant language here, you know.
I get the.
Living in
Well, it
living
feels
in
like
different
much
times.
like what's been done in the real world, where there's proxies happening left, right, and center. But yeah, you're right. I think people are
Exactly.
treading this fine line between what they can acquire and what they can have influence over. Yeah.
So apparently TikTok is throwing 20 million a month on OpenAI at OpenAI via Microsoft. So I think 20 million MRR from a single customer. It's pretty good.
Yeah.
I want to know what's the margin. You know what I'm saying here?
Yeah. Look. So how are they using it? How's TikTok using it?
Uh,
Do we know?
I don't really know. It says they're building their own AI models, but apparently 25% of Microsoft AI revenue is TikTok.
Wow.
Yeah, I don't buy that. I think it's a bit inflated.
That sounds like a lot, really. But no, no. I think, like you say, I mean, there's some weird economics going on here on how the models are being used, and look, I think this whole correction will start to see what really is happening, and I think that this week will probably start to people will scratch below the surface a bit more around what's really going on, and whether the numbers stack up around what's how that can work over the long term. But once again, I think there will be solutions to all of this. The question is that solution now? Is that solution in a little while? And where you want to play if you're an investor, where you want to invest. And like I say, I still stick by, where we're looking at is the place to be. And all these problems and things will sort of work out over the coming months and years. I guess, look, on a last note, in Australia, we've got an interesting event on tomorrow night. 45 exciting early stage Australian, New Zealand generative AI startups. They've been going through a AWS generative AI spotlight program, so we're going to go along to that. And it'll be really good to sort of see what the kind of startups will be. I'm excited to kind of come along. We've got a couple of hours. I know that early stage companies that are coming along, but I think there's healthy things happening at that early stage in Australia, and I think there will be some of those companies that will go through this challenging time that we have now, and hopefully be some of those leading companies that are out there in the future. So, look, I think that's this week for AI, and I will catch you next week, Dror. It's been a good week, scary week, but good.
Good week.
All right, see you later.
Bye bye.